All right, we are going to go ahead and get started. Thank you for joining us for today's webinar, where we will be discussing business credit reports. This webinar is being recorded. All attendees will receive a follow-up email with today's recording and presentation deck within a week. All participants have been muted, so please use the Q&A box for any questions, and we will answer them at the end. Your presenter today is Rod Griffin. He is the Senior Director of Consumer Education and Advocacy. And with that, I'd like to now hand it off to Rod. Welcome, Rod.
Lena, thank you so much, and thank everyone for joining. Just a bit about my background. As Lena said, I'm Senior Director of Consumer Education and Advocacy for Experian, and happy to be here. My role is in our company is to really help you better understand what we do, how it works, and how you can be engaged. And in this case, today, to talk about business credit reporting, which we do. People often think of Experian as a consumer credit reporting business, and we are. That's one of our roles, but we're also much more than that. We are one of the largest competitors in the business credit reporting world as well, second to Dun and Bradstreet, and really specialize in small business and focus there. Today, I want to do several things with the presentation. First, I want to provide some background and sort of a foundation with a discussion of the basics of personal and business credit reporting. It's important, I think, to start with personal credit report because for most small business owners, that's where you begin, is with your personal credit, and often underwrite your business expenses initially with a personal credit report. So it's important to understand some fundamentals there, and then how to build toward a business credit report. I want to recognize the value of having both positive personal and business credit, understand how personal credit can affect your ability to get credit for your business, and then how your business credit can affect your ability to qualify for personal credit as well. And then discuss briefly how to manage both your personal business credit reports to help you and your business be successful, because there are very clear links between the two. So starting out, and as we go along, as Linda said, please put your questions in the Q&A. I'll do my best to answer them. But to start off, we'll talk about what credit reports are and their importance. And from a personal standpoint, just at a very basic level, credit reports are a record of your financial accounts and obligations, the identifying information that goes with them. You'll hear them called credit reports or credit files or credit histories. They're all essentially the same thing. And within the company, we will differentiate based on how they are, where they reside, essentially. So if it's printed, it's a credit report, or on a screen. If it's a credit file, it's in the computer system, that sort of thing. But from the perspective we have here, and that most people have outside, when you're looking at it, it's a credit report, a credit file, credit history, all the same thing. So if you hear those terms, that's what they're referring to. Our role as a credit reporting company in the personal credit reporting world, and essentially in the business credit reporting as well, is to collect and organize information about your credit history, along with bankruptcy public records, and compile them in a way that can be accessed and reviewed to help businesses make lending decisions and to manage their risk effectively. We don't make decisions about who gets credit. We don't make decisions about whether a person has good or bad credit. Our role really is to help provide information that lenders can use to make those decisions for both businesses and individuals. When you look at your personal credit report, you're going to see several things. In the business credit report, which I'll talk about at length, you'll see similar kinds of information, but related to the business. In a personal report, you're going to see your identifying information, your name, address, social security number, date of birth, current addresses, previous addresses, and so on. You need to know who you are. There are about 220 million consumers with active credit histories, and most do not are not uniquely named. Most people have more than one person have the same name, put it that way. So your name isn't sufficient to differentiate. So we rely on all of that information as identifying information. You may also see variations in your name, your address, your social security number included in your credit report. They are not errors. Often see them characterized that way in some reports. we include that information purposely so that if, for example, you apply for credit using your full given name, but also a variation. So if your name is Robert and you apply as Robert, but then also apply for another account as Bob, you would see both names in your credit report. We do that so that if there's a name you don't recognize, it could indicate fraud and you need to be aware of it. Same thing's true of Social Security numbers. We don't have access to the Social Security Administration records directly. And so we list every variation that may be reported to us. Most of the time when you see a variation, it is a transposed digit. So instead of 1, 2, 3, 4, it's 1, 3, 2, 4. We can help identify that and help you identify the source as well and get that corrected in their records and then updated in ours. But if it's a Social Security number that doesn't belong to you, it could be an indicator of fraud. We want you to see it. So when you see those variations, know that they don't affect the lending decisions. They don't affect credit scores, but they are there so that you have a complete record of what's being reported to us. In your personal credit report, you're going to see every type of account that you may have with a lender. So you would see installment loans, things that are paid once a month with a given amount for things like furniture or other sorts of things. You may see revolving accounts. We typically think of them as credit cards, where you can carry the balance from one month to the next. You may see charge accounts where you're required to pay the balance in full each month. The most common example of that today is probably the American Express card. So you'll see the type of account: mortgage loans, auto loans, any other sort of collection accounts may also appear in a credit report. You would see the type of account. You would see your association with that account. Are you the primary account holder? Are you a joint account holder? Are you an authorized user? You would also see, in the case of installment loans, the principal loan amount, and then you would see the current balance. With a revolving account or credit card, you would see the credit limit and the current balance. In every account, you'll see the payment history, which is the most important factor in a credit report as it relates to credit scores and lending decisions. Are your payments being made on time? Are they late? If they're late, how late are they? So critical that you make those payments on time, keep the balances on your credit cards as low as possible. You'll see when we talk about business reports in a moment, similar, very similar sorts of requirements and similar information. So make sure that those payments are on time. It's going to help you establish business credit as well. You may, in your personal report, see bankruptcy public records. That's the only public record that you see today in a personal credit report. We have removed all other personal public records from credit reports. So you won't see things like civil judgments. If you're sued and you lose, you will not see tax liens, whether paid or unpaid. You will not see library fines. Just so you all know, I've been with Experian now for almost 30 years. When I started, we still collected library fines. Don't do that. Haven't done it for a very long time. So you won't see that anymore. So parking tickets, same thing. We don't include those anymore, but used to. So you would see bankruptcy public records. That's really it. You may also see inquiries into your personal credit report. An inquiry is simply a record that someone's looked at that credit history. If you've applied for a new credit account, that inquiry may be shared with lenders and may affect your personal credit scores a little bit. They are the least important factor in credit scores, but the reason they do affect that number is because when you've applied for a new account, it typically takes a full billing cycle, so 30 to 45 days before that account shows in your credit report. So you may have existing debt that doesn't yet show on the credit report, and so that inquiry indicates some risk. After that new account's reported, the inquiry really ceases to have any indication of risk, so its impact on credit scores diminishes tremendously or goes away completely. FICO ignores those inquiries after 12 months, even though they're on a report for 2 years. So those are hard inquiries. Soft inquiries are other kinds of requests for your report. They include things like getting your own credit report, reviews for account review by your existing lenders, pre-approved credit offers, employment inquiries, insurance inquiries, things like buy now, pay later loans. if there are inquiries. Buy now, pay later is a bit unique. Most soft inquiries are only shown to you. Buy now, pay later inquiries may be shared with a lender, but they will have no effect on credit scores. So they represent a new kind of debt that's becoming more common in the marketplace, but it isn't shown typically or reported to the credit reporting companies. So if there's an inquiry for a buy now, pay later loan, a BNPL loan, it may be shared with the lender so they have visibility to that debt, but it will not affect credit scores. So important to know that it's the one exception. And then dispute instructions. If you find something you believe is inaccurate, we give you instructions to contact us by telephone, by mail, or online so that you can dispute that information. Pretty straightforward. If it's not debt related, it's not part of a credit report. The other question I often get is how long does the information remain in my personal report? Well, it's pretty straightforward. Open accounts in good standing remain indefinitely. So if you have an open account, they will remain until that account is closed. If you close the account and it's in good standing, that closed account will remain in your credit report for 10 years from the close date. That means we keep the good stuff longer than the bad stuff. Late payments remain for 7 years from the date of the missed payment. Collection accounts get a little more confusing. They remain 7 years from what's called the original delinquency date, or the date of first delinquency. That date is the date that the original account first became late and after which was never again current. So if you had a payment due today, became late, it was actually with us 30 days late, so you've missed a full billing cycle, and then never catch up, the account's charged off as a loss, and then it's transferred or sold to collections. 7 years from today, that date, that account and the collection account would be removed. If you had a payment that was reported late today on an account, you caught up next month and then fell behind a month later, 7 years from that first missed payment, that payment would be removed. And then a month would pass because the account was current. And then the rest of the account and the collection account would be removed because after that next missed payment, you never caught up. So it can be a little bit confusing. Chapter 7 bankruptcy remains for 10 years from the filing date because you do not repay any of the debt. And Chapter 13 bankruptcy remains for 7 years because you do repay part of the debt under a Chapter 13 bankruptcy. And inquiries remain for 2 years as a matter of law. As I said, they really only affect credit scores for a short time, typically 2 to 3 months after the inquiry. And then there's either a new account that indicates that that's the key risk indicator, or there's no new account, which means for some reason you just didn't perhaps decide to open the account. Doesn't mean you were declined. There's no new account. And so the inquiry doesn't represent risk. And so any impact on scores goes away. So really pretty straightforward. And then the sort of the last piece of the foundational piece, and then we'll talk about the correlation. So between business reports and personal reports. What's a credit score? There's often a lot of confusion. A credit score is simply a tool that's used by lenders to evaluate the information and the risk it represents in a credit report. There are lots of different credit scores in personal credit reporting. There are different scores for different types of lenders. So Provident, as a credit union, may have a credit score that's used specifically for their members and their members' characteristics. As a credit union, national banks may use a different credit score because they have different customer characteristics in their business. There are also different kinds of scores for different types of lending. So if you're buying a car, auto lenders will use a different score than if you're buying a house, and a mortgage lender, because they're trying to determine whether you'll make that car payment on time, regardless of your mortgage debt, and vice versa. So with credit scores, lots of different scores. Because there are different types of lenders and different types of lending. Credit reporting companies might be involved in the scoring process. We have about 220 different scores that are 250 somewhere in there that we can apply, meaning we can route a credit report through. And we get paid for the service of collecting and compiling the credit report and then applying the score. The scoring company owns the scoring model or the formula. So companies like FICO or VantageScore, they get paid for the score. The score is not part of the credit report. It's a completely separate element. That's when we're involved. We may not be involved in scores at all as a credit bureau. with a personal credit report, we may send the credit report directly to the lender. They may then, once they have the information, apply their own scoring models and calculate scores. So we wouldn't see those scores at all. Or in the case of mortgage lending in particular, we'll send the reports to a third-party mortgage reporting company who compiles application information, other credit bureau information from the other credit bureaus and so on. And then they calculate scores and send all of the information to the mortgage lender. So we wouldn't be involved in that case. So it's important to understand that distinction, that a score simply represents the information that's in your personal credit report. There are some differences in business credit reporting, but also a lot of similarities. And I'll talk about those as well. If you're getting a personal credit score, you should receive a series of what are called risk factors that go with those scores. Scores themselves, the scales range widely. There are scores that I've seen that go from 350 to 850, which most people know about. There are also scores that range from 0 to, from 75 to 108. Saw a score once. There are scores that go from 1,300 to 0. The lower the score, the better. So it's hard to compare number to number. Even within FICO scores, FICO being a scoring company, their standard range is about 350 to 850. But if you're buying a car, their auto scores go to 900. So you might have a score greater than 850. So it's hard to compare number to number. And what's really important is to compare what does that score mean in terms of risk? And then what do you do about it? How do you know how to make it better? The bottom line is every time a credit score is calculated, a series of what are called risk factors are generated. Those risk factors tell you exactly what from your credit report most affected that particular score. Unlike the numbers, the risk factors tend to be very consistent from one system to another. So if you work on those risk factors and address those, all of your scores will get better. If you're planning to apply for a business loan or a small business loan and use your personal credit to underwrite that business loan, it's going to be important that your personal credit history be in great shape and that your credit scores be good. That's why it's so important to understand some fundamental things about the personal credit report and credit scores. VantageScore, I like to share this just because it gives a sense of what goes into scores and also illustrates that there are different scores. I call this the donut because they take the middle out of the pie. But the point here is credit scores look at the same things. If you see a pie chart from FICO, it will be very similar in terms of the way it's broken out. Payment history, whether you're paying your bills on time or late, is going to be about 35 to 40% of the total score calculation, give or take, depending on your credit history. Utilization, which is your balance to limit ratio on your credit card. So if you add up all of your balances and all of your credit limits and divide, get a balance to limit ratio. That's going to be, in the case of VantageScore, total utilization, about 20%. VantageScore is a bit different in that they break out individual balances as well in their chart. So even if you have low balances on most of your cards, if you have one card with a high balance, that could affect scores negatively because they're looking at your balance to limit ratio on that one card as well. That's another roughly 11% in this case. So that's about 31%, give or take, again, depending on your credit history in VantageScore. FICO does look at individual accounts and total utilization. They just don't break it out in their pie chart. And they say about 30% as well is going to be utilization rate. So my math says that's about 60 to 65% of a credit score will be payment history and utilization. So if you pay your bills on time, keep your balances low, that's going to result in good credit scores because everything else that goes into scores builds on those two things. How long you've used credit, what your mix of credit, what we call depth of credit, is about 20%, give or take. Again, recent credit, have you applied for new credit? Have you paid something off recently? Have you reduced your balances recently? Have you taken on more balances recently? Have you defaulted recently? So time being a factor is another roughly 20%, 5%. And then available credit in this case, really referencing sort of a overall capacities, rounds out that 100%. So you'll see very similar kinds of numbers for other scores when you see the pie charts, or in this case, donuts. So pay your bills on time, keep your balances low. That's the whole secret to credit scores. If you've fallen behind, you need to catch up on payments. If you've maxed cards out, pay them down. That's one of the fastest ways to improve credit scores. So I spend time on that so that you have sort of a foundation. Again, as I said, because for most small business owners, that's where business credit begins. When you begin to establish your business, it's often using personal credit to establish those accounts. And you may have business debt tied to your personal credit history. So it's important to understand where that begins, because it's equally important to move as quickly as you can from using your personal credit to secure business debt to having a business credit report. A business credit report is specifically related to the business. It will help you separate your personal finances from your business, and that can be very important for both. And so want to help you understand what those are. So when we look at business credit reports, you'll see a lot of similarities. Your business credit report really acts as your financial references for your business. It helps creditors make the decisions about doing business with you. Similar to your personal report, there are identifying elements in your business credit report, and the business relationships you have related to financial relationships in particular are similar to what's in a personal credit report. There are some differences. So not just business loans, but you may see information from your suppliers, from wholesalers, from manufacturers, from banks, from leasing companies, other types of financial institutions with which you have a financial relationship. So you're making payments, you have terms for the purchases of supplies and so on. That's going to be what populates your business credit history. There are about 25 million businesses in the US that have established credit relationships, and they can be very large, they can be very small. I think it was micro businesses of fewer than 5 employees. So similar, but a bit different. When you look at your business credit report, you're going to see identifying information and company background information. It's the equivalent of your identifying information in a personal report. When you see that business report, you're going to see your company name. You're going to see a list of key personnel, so officers in the business, for example, your SIC code, so the type of business, and whether that business is incorporated, so a standard industry category, I should say, for SIC code, and then a business type, whether you're in a corporation, an LLC, and so on. You'll see information about the business address, the phone number for contact information, the date of incorporation, the number of years that business has been in business, the number of employees, and a sales figure in most cases. That gives a sense of the strength of the business and how long it's been around. So is it successful, as well as who represents it. So we'll know who that business is and what it does. When you look at payment information in a business credit report, it's very similar again to a personal report, but businesses do have a few differences. When you look at a business credit report, often businesses have payment terms for suppliers and those sorts of things. So you may see current days beyond terms. With a business credit report, you may see a payment trend indicator. We don't have an equivalent in the personal credit history yet, but that's something that may come along. You will see the lowest 6-month balance in those accounts, the highest 6-month balance in the accounts that you have, as well as the total account balance. You may also see the highest credit amount extended for in a particular account, the median account across all accounts. You'll see the individual account information as well. And then like a personal report, you'll see inquiries, who's asked for your report, and then public records. Unlike the personal report, there are additional public records. There may be bankruptcy public records for the business. There may be civil suits, lawsuits that have been filed against the business, and those sorts of things. So small claims, those kinds of public records may appear in a business credit report. That's important because it will tell a a consumer, for example, or a potential customer, whether or not that business may be having some issues with its finances. And so those public records are included with a business credit report. Your business credit score is actually quite different, though. There is a business credit score. It operates in a similar way. It's used to evaluate the risk of doing business with a company and to help streamline that application process. Unlike consumer reports, where the score is separate from the consumer credit report and the scores are typically proprietary to separate scoring modelers, when you get your Experian business credit report, we create the score and score that report, and it can be purchased along with your business credit report. Unlike personal scores, there's essentially one for an Experian business credit report. It has a scale of 0 to 100. The higher the score, the lower the risk. So you want to be as close to 100 as you can get. Like a personal credit score, though, we do provide the risk factors that describe what's negatively impacting that score. So by looking at those risk factors, you're able to identify what you may be able to do with your business finances to improve those scores and thereby improve the ability to qualify for business credit at better terms, better rates, and so on. So operates in a very similar way, but it's 0 to 100, and that's the one you will see. So that then leads to the question, okay, great, I have a business. I understand I have a personal report. I've used my personal credit report to secure financing for my business in the past. How do I transition to and establish a business credit report? It's fairly straightforward. There are some steps you need to take. First, you need to ensure your creditors and suppliers can validate your business. That means you need to file the appropriate paperwork and register your business, either as a corporation or an LLC, which is the most common. You need to obtain a federal employer identification number. That's different than an employee identification number, EIN, an individual identification number. It's an identification number specific to the business, so an employer identification number. Then you need to open a bank account in your business legal name. So you've established that your business has a checking account, for example, savings account, the kinds of financial accounts that a business may need to make payroll, for example. So have a business credit account in the business's name. You need to have a dedicated business telephone line and make sure it's listed so that it can be searched. And then establish credit with companies who report either trade information like suppliers or payment information like a lender would. You need to establish that business credit account. Once you've done those things, Experian will create a business credit report for your company and begin to report that information. Fairly straightforward, and it doesn't require any particular outreach to Experian, anything like that. Once you're established, registered, and visible in the financial marketplace, we will be able to create a business credit report for your company. And at that point, you can begin to separate your personal credit from your business credit. Once you've obtained that report, how do you get a copy of it? That's, people often don't realize or understand how to do that. It's really simple. You go to www.smartbusinessreports or to experian.com/business credit report. Follow the instructions there. If you've been declined credit as a business, let's say your business has been declined credit within the last 60 days, you can get a free copy by calling 888-211-0728. I'm still telephone based. And you can purchase a report with a score as well. I think they're about $14. Personal credit reports are free for all intents and purposes today. There's no reason to pay for one, but there is a fee for your business credit report in most cases. It's about $14. Once you know that report's been established, how do you monitor it? Well, there are several things you can do. One, you can check it frequently and enroll in a service to help do that. Make sure it's up to date. You can request a one-time report. You can sign up for credit monitoring. We call it Business Credit Advantage. If you enroll in Business Credit Advantage, you get unlimited access to your company's report and score. You get email notification of any changes to your business credit file, and you get early warning of any negative changes that might affect your business, and whether that be in terms of obtaining future credit or with a business credit report, potentially using that report as a marketing tool. What often isn't understood is that a business credit report is available to anyone who might request it. So if you're a small business and your company's doing well and you have great financials, it can be a wonderful tool if you're a contractor, others to use to ensure potential customers that you are a reliable business and that you will do good work for them. It's a great marketing tool. So, think of it as a way to actually engage customers more effectively. The next question that's important to ask is, well, are my business credit report and my personal credit report linked? And the answer is no, not directly, but they can be related, especially if you've secured business credit with your personal credit history. So, as I said that several times, that's how most small businesses begin, is using personal credit to secure financing to establish their business. So it's important to begin separating those two as soon as you can. The Fair Credit Reporting Act, which governs personal credit reporting, allows lenders to review that personal report for business lending if you meet certain criteria. If you're a proprietor, tongue-tied today, of an unincorporated business, so that's why it's important to register as an LLC, so corporation, so on. If you're a partner in a partnership, or if you personally guarantee a business loan, they can check your personal credit report. The personal credit information, if they choose to do so, must be solely for a business credit transaction. They can't review your personal report for ostensibly for a personal transaction and claim it's for business use. If you're securing business debt with your personal credit, you then become personally responsible for that debt. And that's something that's really important to understand. If you've used that personal credit report to secure that debt, the lender can report the account and any mispayments to both your personal and business reports. That's how they become connected. So if you're using personal credit to apply for financing for your business and your business struggles, those late payments can be reported to your personal credit report, so it could hurt your business and your personal credit history. Likewise, if you're using personal credit to fund your business and you have issues in your personal finance life and the lender's checking that, it could affect your business ability to qualify for credit. So separating your personal report and your business report is essential. And to do so, it means having a business credit history and business credit accounts, and using those accounts to secure financing for the business and not your personal credit report. As I mentioned, personal reports have hundreds of different scores that help them evaluate risk. Your business has one score from Experian to help make that decision. What we know is that both your personal report and your business report can be used to benefit your business, especially for small business. More than 90% of U.S. businesses are small businesses. Most have fewer than 25 employees and less than $20 million in annual revenue. So small businesses, $20 million still sounds like a lot to me as an individual, though. Small businesses often have little or no credit history to start with. And so that makes it difficult. Half of all owners use some form of personal credit to finance their business. And so that acts as their personal references. Once established, your business credit report will be essential in helping suppliers gain their willingness to extend credit. It will help with achieving lower interest rates and better terms. It can also affect your business premiums on insurance for your business. So a hugely important financial tool as a small business owner. If you get your business credit report, you find something you believe is inaccurate, you can dispute that information. The first step is to get that business credit report at either of these websites. If there's incorrect demographic information, you can update it at businesscreditfacts.com. So go to that website, follow the instructions that are provided. Other disputes will need to be submitted in writing. You'll see the address on your business credit report. That process typically takes 30 days or less. Most of what we're able to do is automated today. particularly in the personal side, which is different, but with business credit report going the same direction. And then you can monitor that report to make sure those changes are made. If you need to speak to a representative, you can call us directly, 800-303-1640, and speak to a business credit representative. So how long does information remain in a report? Like personal reports, we think of them as a credit history, but they're not permanent. You can change them, and information does change with time. We use standard industry guidelines to determine how long information remains in a report. We track expiration dates to make sure that we provide an accurate picture of that business's financial health. This is how long information remains. Again, very similar to a personal report. Trade data, so business accounts remain for 3 years. Bankruptcies remain for 10 years. If there's a civil judgment, they remain for 7 years from the date of that judgment. Tax liens remain for 7 years. UCC filings for 5 years. Collections for 7 years. And then bank and government leasing agreements and contracts for 3 years. So very similar to a personal report, just from a business perspective and the kinds of accounts and relationships a business would have. So with that, just sort of to tie things together, your business grows with good credit practices, just like your personal financial health. It's important to maintain separate and distinctly separate business credit file from your personal credit file to ensure that what's happening with your business doesn't negatively affect your personal finances and protects you in that regard, and to ensure that your personal finances aren't affecting the business. Staying current with payments on your creditors is critical. It ensures that your payment history is reported to the bureaus, lets you monitor that business credit file, which also is critical to identifying potential fraud, which is a growing issue in small business in particular. And if you're a small business owner, and particularly a small business owner or an individual proprietor, identity theft against you could affect your business. So it's critical to monitor both. And then doing business and using your business credit reports help limit your risk with others. So you can check their business reports just like they can check yours. So if you have suppliers, check their business credit reports. It's going to help you better manage your risk as well. So use those financial tools, use the data that's available to help you be more successful, both individually and a business, and understand the connection between the two. That's something I think is critical. I can't stress enough that you don't want to have your personal credit report entangled with your business report and cause financial challenges for both sides of your life. So establish that business credit history as soon as you can and use it and monitor it. There are a number of resources available. We have a score planner tool that can be used to help you develop strategy. When you visit our business credit report websites, you'll be able to see that and also help access your access capital for your business and qualify for better terms and rates as your business grows and be able to plan ahead. So I mentioned these websites earlier. If you're getting a free credit report personally at annualcreditreport.com, you can get a free one once a week. The law says once a year, but the bureaus, personal credit reporting bureaus, Experian, Equifax, TransUnion provide a free report once a week. And then to learn more, you can visit experian.com/credit education and with or without the hyphen and learn more there. We have a number of education materials and resources related to both business and personal credit. To learn more, you can also visit our website at Experian.com and ask Experian. We have thousands of posts about business credit, personal credit, how to manage them both to be more successful financially, and businesscreditfacts.com. So, as well as the score planner. So, number of resources available. With that, I'll stop talking and be happy to answer, or at least do my best to answer any questions you might have.
Thank you, Rod. Go ahead and enter in your questions in the Q&A box, and we will go ahead and answer them.
Very quiet group.
All right, it looks like we don't have any Q&A. If you do have any questions, oh,
Oh,
sorry.
go,
I guess
go.
you were still typing. Sorry about that. Go ahead.
Can can we open a mic and whoops, lost him. Oh, there we go. Okay.
My company's name was changed many years ago, and the credit report from Experian still shows the old name. I was not successful asking for it to be updated. So how can they get that updated?
So can you send Lena, can they send an email to you and then forward it to me? And I will have someone follow up.
Okay.
And then we'll figure out what's happening there.
Yes, I will go ahead and um, get your email from the registration and we'll follow up on that. Thank you. Um, it doesn't look like any other questions are coming in. So that concludes our webinar today. Thank you for all attending. I hope this session was helpful to you. As a reminder, we will be sending you a follow-up email with today's presentation.
One more question popped up.
Oh,
so
how does Dunn's report relate to Experian?
And it relates to Experian. Dunn's is Dun and Bradstreet, and so they're a competitor. So the Dunn's report relates in the same way that, say, Experian personal report would relate to a TransUnion credit report. They're two separate reports. They are competitors of ours. So, business can choose to look at a Dun and Bradstreet report. They can choose to look at an Experian business credit report, or both. We have our score. They have theirs. So it's a competitive situation, and a Dunn's credit report or a Dun and Bradstreet report is a separate entity, a separate business, and a competitor of ours.
Thank you. Yes, this webinar is recorded and will be sent to all attendees today. And we'll also send you a copy of the presentation deck as well. And you should receive that within a week or less. Great. It looks like that's all the questions we have, Rod. Thank you, everyone, again, and have a great day.
Thank you all.